Most traders lose money even when they're right. Here's how I still make money month after month even when I'm wrong. In this video, I'll show you step by step how you can grow a small trading account into a large one following specific rules and strategies step by step. And don't miss out on a few secrets I reveal throughout. Let's get into it. Secret number one here is you only want to focus on high quality setups. Now at the end here, I will go over a specific strategy so you can see what I am looking at on the charts to avoid low quality setups or not A+ setups. We're not getting stopped out. So think about everything in your mind where a trade could possibly go wrong. Only focus on those high quality setups because A, you don't want to be trading all day every day. B, you don't want to take too many trades during the session. And C, usually this leads to unprofitability in trading. So make sure you are focusing on those high quality setups here. Now, you are going to have your general rules for your strategy that you must follow to a T and stay very disciplined at. And you're also going to have general rules of trading throughout the day. This means, for instance, when I'm trading during a session, usually it's 1 to 2 hours long, New York's open or Asia's open, and usually it's only 1 to 3 trades per session. If I win the first trade, I'm done for the day. If I lose the first trade, I may go for a second or third trade to A, either become profitable for the day or at break even, because with a 2 risk reward ratio, if we win the second trade, we will be profitable for the day. Are those days where you're going to lose all 3 trades? Sure. That's when you put yourself a stop so you're not getting into deep revenge trading and losing more and more of your account. This leads me to secret number 2 here. You want to master trading as a game and not focus on the money. When you only focus on the money or look at that P&L when you are trading on Blofin, Bybit, MEXC, Phemex, whatever it may be, you are more likely to either get that fear where you should market out of a trade before it hits your stop loss or not take the full profits and let it come to your take profit area. What you really want to do actually is focus on your risk reward ratios, meaning you're aiming for a 2 risk reward ratio, 3 risk reward ratio, 4, or something of that nature, and also making sure that you are following your strategy to a T. You're not moving your stop loss, you're not moving your take profit, you are sticking to that strategy no matter what. So this brings me to my next point here, that when you are day trading and starting with a small account that you want to grow fast, you must maintain these kind of general rules of thumb in your head, meaning you are only risking 1 to 5% of your account. Now this may not seem like a lot, but you need to think about the trading psychology in your own trading mindset and what it's going to do if you risk more than 5% of your account. Okay, so let's say we have a good trader with a $1,000 account. They're risking about $50 per trade, right? At 5%. That means if they lose a trade, they lose $50. They win a trade, they win $100 at a 2 risk reward ratio. So let's say they lose a couple of trades. Maybe they lose $50, they lose another $50, but then they have their winner at $100, maybe they're break even for a day. The next day, let's say they won their first trade. Now they're $100 richer, okay? So you're slowly building this account up into becoming something that you can easily scale up. Now, let's say on the opposite end, right, we have a bad trader, meaning they're risking more than 5% of their account. Maybe they're risking 10%, 20% of their account. They're not sizing their positions correctly. They're just entering random numbers on the brokerages. And I will show you exactly what tool to use so you can position your sizes correctly when you are entering them into those brokerages. Now, this bad trader is probably risking $100, $200 a trade because they want to get rich quick or they want to build their account really as quickly as possible. So let's say they lose the first 2 trades. They've lost $100, maybe another $100. Now they're probably thinking in their own mindset they should size up more because they want to get that money back, and they lose another $200. So now they're down almost half of their account. You need to think of what this is doing to your own trading psychology because this is what leads to blown accounts. Now, this brings me to secret number 3 here. Once you have doubled your account, take out or put the money that you initially brought into the account somewhere else, meaning you put it into your bank account, a spot account, somewhere where it's not in that futures trading account, right? So you can't see it. That means you're just playing with house money now. Your trading psychology and trading mindset will be much better knowing you have that on the back end, okay? So let's say you have a $1,000 account you brought that up to $2,000 over 10 days or a 2-week period of time. You take that $1,000 out that you initially put in, put it somewhere where you can't see it, and keep trading with that $1,000 account. So that way you are not worried about losing your overall initial investment. Now, secret number 4 and 5 here, right? We want to let our trades run. I'm going to let you guys in on a little secret here on what I do every day. And we want to preserve our capital at the same time, okay? Because things are not always going to go in our way. But first, we're going to get started. We're going to move to Bitcoin, okay? Market opens at 8:30 a.m. Central for me. So if you wanted to wait until 9:30 a.m., 10 a.m. Central, you can really see what direction the market is headed based on New York or London session. Now, if we're ranging or we look something like this where we're crisscrossing our EMAs back and forth, just avoid this area. It's too risky to trade, okay? I'd say avoid. We're not going to trade those back and forth EMAs. We want something that's in our favor, that's trending. This is where you will tend to lose a lot of money on, okay? You're going to think it's going up, goes down, up, down, whatever it is. Looks like hindsight 2020 here. Pretty simple, but it's not when you're actually trading this. It's a range. We want to avoid those areas. So let's go ahead. I'll show you this pretty easy scalping strategy. So we will play this forward on Bitcoin, right? Bitcoin, we first want to see where we are headed for the day for the overall market. Here's where it gets tricky, right? It looks like around 8:50 a.m., we headed to the downsides. A lot of people probably took a short here, and this usually happens at New York. You get a liquidity sweep towards the top. If you don't understand what liquidity sweeps or liquidity grabs are, please visit my previous video down below where I explain them. So we'll play this forward here. Now, a lot of people probably took a trade on this 5-minute bullish fair value gap. So you could have taken a loss here, right? All right, we went way past our stop loss. I go over this strategy pretty well on my channel, but usually my stop loss is going below this 5-minute bullish fair value gap had you taken along there. So maybe we're stopped out of our first trade. That's fine. We could still have 2 more trades to play with. Look what we have here now. It is now 9:40 a.m. Central. Great time to be looking at the market to see what direction we are trending for the day. We have 2 5-minute bearish fair value gaps. This is when I'm hopping over to sold and trying to look for a nice play that we could possibly get into. Chances are, with the way these EMAs are looking, we could trend down the rest of the day. So we will go ahead, take our fib. We're getting dragged this from swing low to swing high since we're looking at shorts here. We will move to sold here. We got a few 5-minute bearish fair value gaps we do have on in Bitcoin that I'm usually looking at. Drag this since we're looking the short way, swing low to swing high. We're going to place a limit order. We're not going to mark it in. You really want to be saving on fees, right? When you hit higher levels, because once you start trading with thousands of dollars, you will be paying hundreds of dollars in fees. It sucks, okay? So next step, we are going to look for a quantity. Like I said, we need to have an exact quantity. A lot of people mess this part up. So you can take your short position here. You can go ahead, drag it to 1.272. You'll notice our quantity adjusts with our account size and with our stop loss. So let's say we have that $1,000 account. We're risking 5% or $50 per trade. And where's our stop loss going? I'm usually, especially on the beginning of a downtrend here, we have this nice 0.382 level it sometimes likes to hit. We have a couple of 5-minute bearish fair value gaps here. Usually I'm putting it above, like I said, a 5-minute bullish or bearish fair value gap candle. If we're coming up to the 0.17 level, I do not like this area. It just signals to me a possible reversal. So to start out, we're going to go ahead, place it above the 0.382 area and that 5-minute bearish fair value gap candle. And what else do we have there? We got some support or wicks coming down into the area that makes sense to me. It could just fly through this kind of area since we don't really have any wicks through it and come back and hit this. A lot of people probably have positions placed there. So that makes sense to me. So next we will go ahead, play this forward. Our quantity is 98. Go ahead, put 98 units in here, right? On that $1,000 account. If you wanted to just take profit at 1.272, call it a day. Certainly you can. However, like I said, if we're in a trending market, a lot of times the whole day it will trend down. So I'll show you a trailing stop loss really quick too, where we can possibly get, guess what? 11 risk reward ratio. That's crazy. So this is how you really set yourself up and let these trades run while also preserving your capital. Play it forward, All right, we're in this trade and we are actually going to trail this down on the 5-minute time frame with 5-minute bearish fair value gaps. So I'll go ahead and delete this just so it's not in the way. Take out our trailing stop loss here, right? We're still here. See if we can get this to break even at least. So here's our next 5-minute bearish fair value gap. We'll go ahead, trail this down. I like to trail it down with the fib lines here. We'll trail this down with this 5-minute bearish fair value gap. Keep it going. A lot of times people will trail it down with the support resistance area. I prefer the 5-minute bearish fair value gaps. So here's our 5-minute bearish fair value gap. This is our stop, trailing stop loss, right? Here's our kind of next 5-minute bearish fair value gap candle. Put it just above this fib line. Safety assurance. Oh, we got this one here. Trailing it down with this fib line. So 5-minute candle. Oh, that's right at the wick. A little bit of breathing room. Trail it down. Some more 5-minute bearish fair value gaps. Above this fib line, right? We got this 5-minute bearish fair value gap, 5-minute bearish fair value gap. See where we end the day. What's our profit at? We're at $419. Okay, $419 here. Keep it moving. So trailing this down, all these 5-minute bearish fair value gaps. Just kind of the next candle. I'm out of fib lines. I could redraw my fib lines and see. Kind of end of the day here, right? This is currently live. So we are coming up against this. Could I keep trailing it down? Certainly. I don't know how we're going to end the day, but that's how I would trail a trend down for New York session like this. We are just flat out trending downward. So that's a little secret to letting your trades run, preserving your capital. Trail it down with those 5-minute fair value gap candles, bearish or bullish, whichever way you're going. And like I said, let's say you missed the play up here. That's fine. We can do this the whole day. We can ride this trend the whole day. Remember, the trend is your friend. Once the market picks a direction, right? A lot of the times for London and New York, it will tend to go that way the whole day. So let's say we didn't see this till 12 p.m. Central my time. Here's a fib line. Sometimes I'm even backtracking fib lines. Maybe I hopped on here. We can enter 0.618 here, depending on where we hopped on. We're still hitting this 2 level. Just keep drawing this fib to wherever you're going. And once we start hitting that 3 p.m., 4 p.m. Central Time, market's pretty much done for New York, so usually time to hop off. But say we sell it here, swing low, swing high, kind of came up a little bit farther than I would like there, but here's our 0.618, here's our 1.272. Check out my videos down below on more liquidity sweep and liquidity grabs. If you guys have questions, drop them down below too. Thanks.